Well, good afternoon, everybody, and welcome. We have a really decent sized audience for this May 13th edition of Bull Sessions. Happy day after Mother's Day to everybody out there. Hope everybody had as good a day as we did here. It's a little bit blustery here in Michigan, but I am joined here by my never blustery, and Ken would like everybody to be aware that the new Pope is a mathematician, Ken Kavula.
That that was a fact Mark brought to my attention. I didn't even realize it.
Actually, it came from our friend in Maryland originally.
From Mr. Galogli. Okay,
Yeah.
Mark, we're getting somebody in our audience just adding to that discussion we had before we began about EXLS, and this is from Patricia. And Patricia is telling us that EXLS just moved to the big value line, the big book.
Oh, well,
so that'll remove the 5-point penalty almost immediately. Then, yeah.
Most likely, and very often that comes with a financial strength upgrade too. So we'll see if that happens in their case also. We're also joined here this afternoon. Kim is hovering in Indiana, tending to some repairs on the residence. Good afternoon, Kim.
Well, hi, everybody. I hope you're all having a good day.
And we're also joined by Houston's Matt Spielman. Good afternoon, Matt.
Good afternoon.
All right, so we're going to, I don't know how long this is going to last today, but we will just kind of ramp through it, push through it, and we're going to look at artificial intelligence as we're just putting it through paces. Some of them, many of them, inspired by some work done by Ty Hughes, who's also in the audience today. So we will be taking a look at that. And I do want to put everybody on notice that I'm considering canceling the groundhog.
Tell them you'll show them why in just a moment, right, Mark?
It's still in the pondering phase, but it would really help if somebody would send me, Portillo's gift certificates or something to lift my spirits, because it's oh goodness gracious. All right, and then we'll take a quick update on the Microsoft Balloon from the roundtable. So Ken, are you good to go?
I'm good to go, Mark. I'm watching the question box. And folks, if you have questions or concerns, put them into the questions box and we'll try to get them answered. And don't forget, you can raise your hand in this session also. So if you want to raise your hand and have us unmute you, we'll be glad to speak to you. Mark's right. We do have a really nice audience tonight or this afternoon. So let's keep going. Yeah.
I would say virtually everybody knows the drill here, but if you are joining us for the first time or if you're a relative newcomer, welcome. Consider this a big group hug. What we're here to do is to basically explore the methods, techniques, and philosophies of the Modern Investment Club movement as championed by Better Investing and the National Association of Investors and as interpreted by us at Manifest Investing. It is one big community of long-term investors, many who have witnessed success and simply like to share ideas and approaches to help other people also experience success. No investment recommendation is intended, so just please be aware of that. And Patricia, I still got to say it, you are responsible for doing your own homework. Patricia sent me a note cautioning us that research ain't what it used to be. So we're going to actually talk about some of that today with some of the AI stuff as we walk through it. As always, be careful out there and trust but verify would be our standing advice. We need somebody
out there, Mark, that's a little bit fluent in Latin to give us that phrase in Latin, and we'll put that at the bottom of the manifest coat of arms. Okay.
You mean carpe diem?
No, I mean trust but verify.
Oh yeah, that's seize the day. Well, that too. That applies too. So we are not the boss of you. Make your own choices about the investments that you select and the tools that you use. If you would like copies of these slides, or if you have follow-up questions or suggestions for future topics, your suggestions are golden to us. So I'm serious. You've taken us places we never would have dreamt. please send an email to either one of us if you want something or if you want to suggest something down at the bottom of the page. Anything else, Ken?
Nope, let's keep on it going, Mark. We have a nice agenda today.
Okay. All right. Well, the Pope's only been there for a few days, and Portillo's has already named a sandwich after him. So I thought that was outstanding.
I
And
thought they rolled that sandwich out the afternoon. The white smoke came out,
I'm pretty sure that they did, and they're already taking credit for feeding him. So it's all good. And of course, the chart has improved dramatically. I'm calling that the papal bounce. It's up almost 20% since Leo took over. And again, we don't necessarily understand the chart yet, but anytime you go roaring into the catch-up on the right, and as long as you got enough relish at the bottom, I think that's a good thing. So we'll leave it at that for now. All right, so just real quickly, again, happy Mother's Day. We are going to take a look at the Buttonwood portfolio today and some interesting updates from pizza to steak to coffee. And if you're not aware of it, this weekend's update of Starbucks was a little bit tepid. Just leave it to you to go and check that out. They've actually had a downdraft in some of their fundamentals, and basically we're not given them much of a blessing from the folks at Value Line. So take a look. And again, there's that quote that we talk about so often, this notion of being disciplined and patient.
Mark, we have two Latin scholars in the audience, but they're not agreeing as to what the words would be. Okay, so we'll have to weigh in, see if anybody else weighs in and verifies one of the other two. I might have to ask the AI search engines to tell me what it is in Latin.
Yeah, I've got an AI answer that says the Latin phrase rather than direct translation is fide sede vide. So we all agree on sede.
Okay, so we have crede sede proba and crede sede verifica, or verifica. So we have a lot of possibilities to put on the coat of arms, Mark, as soon as you get the coat of arms finished, okay?
Yeah, and I don't remember hearing any of those expressions in church as a young person, so I don't know.
Were you an altar boy, Mark?
Excelsius Deo, you betcha.
All right.
All right, here's a look at the market as measured by the Value Line arithmetic average. What are we looking at here, sir? Value Lines come down to meet us.
They're beginning to track much closer together, and that makes me much more comfortable. There's still a little bit, there's a 1.5% gap between my par and a Value Line, but that's better than a 2% gap. And so let's keep on watching it. We've been saying for a long while that Value Line tends to be a lagging indicator, and my par is a right today kind of an indicator. So they need a little bit of time to readjust when things are moving very quickly. I like that the light green bar on the graph is now taller than the green bar before it, because the green bar before it was kind of anemic compared to our curve of expected returns there, or reasonable expectations. So all in all, things are moving in the right direction at the moment. We don't have any, for all the exuberance in the market in the last week and a half, we don't have any real movement from the very first of the year until now. The market is essentially flat during that period. So,
except for most of Groundhog Nation's been doing pretty good. So we will look at that here shortly. Well, here's go ahead.
I think the Russell's been acting much better on a daily basis than the other indexes have been. It doesn't tend to be the one on the top all the time, but I think it's been the most consistent grower over the last 10, 12, 15 days of all the indexes we've been looking at.
All right. Well, I need more of that. That's a teaser to follow. Here's that slide where we're basically updating, as we update all of the companies, to track the cash flow trends. And the point that we've made is that 23 and 24 were actually a bit of a downdraft when it comes to overall cash flow for the value line arithmetic average. And lo and behold, our Mother's Day output from the National Retail Federation pretty much confirms that that has been going on for a couple of years also. So there you go.
Mark, is the data point on 24 still being established? Is that why there's no number on it? And is the data point for 25 a forecast?
Don't know.
On the graph on the left.
I'm guessing that the 25 must be a forecast. Yeah.
Okay, so maybe that number, that numerical number, maybe that goes with 2024?
I don't know. I'm not going to write to the National Retail Federation and find out.
Okay, all right.
I guess we should have done it in percent celebrate. No. I hope that percent celebrating is like a flat line at 100. I hope I can't even bear to look. All right. Pressing on to more dreary subjects. Okay, let's talk Groundhog Challenge just for a few minutes, and in a very few minutes, hopefully. Average groundhog return is up to just under -4%. So that's been making a lot of progress in the right direction. Nearly 50% of all of our groundhogs are beating the market now. You can see that the Wilshire lags a little bit. The value line arithmetic average is 4 percentage points behind the Wilshire, which again is pretty unusual. Hopefully that Russell stuff that Ken was just talking about will get resolved. And the monkey continues at about 150th at -7, and I am definitely sub monkey, so I don't care what the rest of you are doing, at least not until I make my move. What do you see,
Mark,
Ken?
we're about three weeks short of a 2-year record in the number of clubs in the top 40. The number of clubs has jumped now from 11 to 14.
I saw that.
And that's the highest that it's been in almost the last 2 years.
Yep.
So some new names have been added to the list. We have a number of winners on the list. I mean, Broad Assets, Cowtown out of Fort Worth, Mid-Michigan Model. Those have been previous winners, and they're moving up into the list. A special shout out to the Antique Warehouse. That's the first time that Mid-Michigan's had a club other than the Cool Kids in the top 20 in a long time. So shout out to Antique Warehouse. And I just have to mention that my grandson Ethan is listening to this broadcast with headphones, and all of his working buddies in the lab that he's working in right now thinks that he's listening to music, but he's up to 4th place again from 9th last time. And Don Sheets in the Wolves Investment Club has moved back into the top 10, up to 7th place. And I told them at the beginning of this contest 2 years ago that I would mention anybody that was in the top 10 from the club. So I've been doing it pretty frequently here for a couple months now.
We are missing an asterisk on either. I don't remember which one it was. Either the Long-Term Investment Club or Plymouth was actually a national champion a few years ago. That's John Kimmel and his bunches out of Kansas, Wichita, Kansas.
Yeah, we got to make sure we have all those asterisks on there. I know that they're coveted awards.
I'll get a coveted asterisk in place. All right, now I'm going to do something that I never do. So I apologize in advance to myself and anybody else who's hanging out with me. But people have been wondering. This is by far the worst I have ever done in 19 years. And sure enough, I waited until there were a whole bunch of people to be on top. So down there with Kathy Wood, last year's champion Jim Gallagher, so I don't feel too bad, but I feel pretty bad. These are the ones. Sandy Castor, our good friend from North Carolina.
Herb Lemcool too.
Herb's down there with you too, Mark. Yeah.
Well, that makes me feel better because that just says that I'm not the only one getting a huge dose of humble pie here these days.
And Mark, our friend Will Mobley, we've known since he was a high school student, and he's now out working in the real world, is sitting down there with you right now. He's been up near the top at various times in the past.
I'm sure that every name on this list is well aware of the wondrous opportunity that they have for improvement. So
we're getting comments from the audience, Mark, and I'll say redacted Artilex. Okay.
it's
Or Ardelyx.
Ardelyx is one of the 5, and then I accidentally picked Oracle instead of Palantir, but that still would have left me in like 190th place. And I did get blindsided by Tom Lee and IonQ. So yeah, we're continue to hope that quantum computing will really go off the charts here in the next few months. So, all right, enough of that. More important perspectives. Again, very few changes on this chart. If you're joining us for the first time, the 10 stocks listed basically prove that we as a community of investors do experience decent levels of success. Most of us own a good number of those 10 names that are listed there. The stuff down the middle is we call it index central, but again, returns from 8, 9, or 10% on average over the trailing 10 years. And Buttonwood has fought its way back to even. So it's full speed ahead, Ken, for Buttonwood.
I guess I'm really surprised, Mark, that CVS continues to be in the 10 stocks most widely followed by Manifest. I would have thought that as long as it's been near the bottom of that list, that it would move down into spot 11, 12, 13, something like that. But it's stubbornly clinging, like with its fingernails, to spot number 10, evidently.
Well, you know, we had 30 or 40 people in the room on Saturday morning here, and we asked for CVS shareholders in the room, and they only raised their hand up to about their navel. But but there was a good dozen, maybe as many as 18 or 20, that basically admitted, myself included, to owning CVS Health.
Well,
Well,
you might be surprised, Ken. It's 10th in position in performance here. The list, I presume, by numbers holding, it's actually number 8, ahead of Google and NVIDIA.
It is.
Oh my goodness.
It is. More CVS shareholders.
I will admit that one of my personal portfolios still holds CVS. It's controlled by the other half of our investing partnership, and it's still there. So
I correct myself because I made the mistake of the 2 Googles. I forgot to add them. So ahead of NVIDIA and Home Depot.
Yep. All right, good stuff. So let's go ahead and talk Buttonwood. First, we'll take a time out and talk because this picture was not quite as pretty when we had the roundtable last month. We're a couple weeks out from the roundtable for May. But since that time, the rate of return has gone up. The number of selections underperforming have gone down, and it's actually decreased lower than that. So I suspect that if I did an update as of this minute, the cumulative loss in that third box down would actually be significantly less than the Microsoft net gains. So
I'm also pretty certain, Mark, that these prices were captured either last Wednesday or last Thursday, so they don't include that a couple of the really big days we've had since then. Yeah.
Yep. So it probably looks dramatically better because, again, that was a depressing moment during the roundtable, and I didn't have a stock to present, so Ken made me talk about this slide. And all right.
People must think I have a whip out of here.
He's a vicious taskmaster, everybody. I mean, all right, Ken, here's one of your favorites, just pointing out that long-term really matters.
Yeah, if you have the time and if you're truly an investor, then hold on. I was so happy to watch a person that I don't normally like to watch on television because I don't agree with a lot of what he says, make an awful lot of sense this morning, Mark, when Senator Cruz, of all people, partnered with a couple of different folks and got into the House budget bill. I know he's a senator, but the House picked up on his program that Cruz has gotten into the Senate bill, and they got into the House bill. And it's such a simple, elegant way to get young folks involved in the stock market. It's putting $1,000 in for every baby born in the country in an account that they can't touch until there's varying definitions of when they can touch it, 18, 25, 30, or make an exception for education, make an exception for other things. But the point is, you put 1,000 in, and then you allow anybody to add up to $5,000 a year as the child progresses up towards 18, and create a nest egg, a beginning nest egg for that person. But most importantly, letting them know that they're part of a capitalist nation, and that the American dream is based on capitalism. And I just thought it was a really elegant idea, and it emphasized this long-term holding period and what compounding can do for you. What a lesson to teach a child, I think.
That's cool. I'm going to look that one up and check it out. And if I can't find it, I'll be bugging you, Ken. But I've also thought about, what about the possibility of not requiring it to be an IRA or a qualified account, but at some point, call it 5 years or 10 years, actually surrender capital gains. Now, I know that's an intense
Well,
question.
no, this part that they have right now in the budget bill, Mark, will make this tax deferred for the first 18 years.
Oh, okay. Well, cool.
We'll let it grow tax deferred.
Yeah,
So,
I think if you hold for even over a year or 5 years, maybe you should get some credit for that, and that would really bolster the capitalism behind capitalism.
yeah,
Cool.
I really think that when you get a program coming from somebody that doesn't normally give you something you like to think about, I really think that we should examine it, and if it's as good as it first sounds, I think we should be some of the first kinds of people to jump on the bandwagon and urge the people that we know in Washington to consider the whole idea. The cost for the program was, to be honest, ridiculously inexpensive when you compare it to what one weapon system costs.
Oh, sure.
It was ridiculously inexpensive. So we need to. The government's only putting in seed money, and then it's up to the private sector that are involved with those children's lives to help it grow. But even if they don't get a single other penny, that $1,000 can still grow to a significant amount in 18 years.
All right, we'll take a look at it and actually give a point by point review at a future session. Good stuff, Ken. Thank you. All right, so let's go ahead and dig into Buttonwood. We'll spend basically the rest of the program talking about Buttonwood. You can see that we actually have had a fairly decent month. The stock market had a better month, but still, it's headed in the right direction. And we did top $4,000 within the last few days. You can check out the actual portfolio itself at that link on the lower left. And the point that we like about this dirt simple slide is it's not the current day balance that matters so much. It's literally how you take care of the portfolio and build that projected future value over time. So that we're going to keep our eye on that. Go ahead, Ken.
Mark, I never anticipated this slide having the visual impact that it's having on me. And that's putting into a nice, neat chart the difficulties that you have in managing a portfolio when the market is taking off and doing really good gains. And that difficulty is in that third column.
Sure it is.
It's keeping the par at a place where you can keep even or better than what the market's doing. That's been the problem over those last two fiscal years, 23 and 24, when the market went up over 30% each of those years. And when the market's doing like it's done in the last 10, 12 days, it's the problem again. It's keeping that par boosted. And that means that you might have to do a little bit more jiggering of what your holdings are than you're normally used to in quote unquote normal markets.
Yep, I told you this was a hot one when we unveiled it a month ago, Ken, but you downplayed it, and here we go. All right, let's get to work. Let's get to work doing what he just said. All right, here's a look at the portfolio. This is listed by the size of the position. So from highest percent of total or value of the position down to the bottom. We do have about 3% of the portfolio in cash, 139 after the $100 infusion. And we're basically looking at a portfolio which, could use a little more growth, could use a little more return. And again, it's a work in progress. You never stop. So a little more growth, a little more return. The quality is just fine. And Matt Spielman gave us permission to speculate away this afternoon. No, that's not what he said, Ken. He said something
As
else.
long as you have the explanation.
Absolutely. All right, so let's go ahead and get underway. We thought we would take the audience through, and we'll just kind of rapidly walk through this, but again, inspired by some work that Ty Hughes had done back a month or so ago, that is a prompt or a query on the left. And basically, it wants to take a look at the portfolio, trying to beat the market by 5%. We identify as long-term investors who look for quality growth stocks and rank order from highest to lowest based on the likely return over the next 3 to 5 years. I think we were using something less than that, but let's give it a go at 3 to 5 years and identify any companies that we should consider selling. And then we listed the tickers in the portfolio at that time. So we went out to those 5 search engines. The one up at the top is Grok. That's the Twitter version. You do not have to use Twitter. If you're allergic to Twitter, you can actually go to grok.com and still get away with it. ChatGPT is the OpenAI version. Perplexity, it's a standalone company. And we got our first look at Claude as we did this exercise, and then Copilot. Now, Ken has done more with Copilot than I have, but we basically asked that same question of all 5 engines. Go ahead, Ken.
Yeah, Mark, I fixed the prompt. I'll tell you why I fixed the prompt, first of all. I was able to replicate a lot of what you were doing and do it at a different time and that gives you a slightly different list of when you do a different time. That makes sense. But I was unable to make Copilot give me a list with this prompt. But I added a single word to the prompt and suddenly Copilot cooperated. And the word was, after the long term in the second line, I just inserted the word fundamental.
So right here you put fundamental investors?
Right, And the reason I did that was that when Copilot demurred and said it didn't want to give me a list, because it didn't know what my style of investing was. And then it went on to explain, was I a fundamental investor, and gave me some examples of what that meant. And then it said to me, are you a technician? And it gave me examples of that. It said, are you a dividend investor? And gave me examples of that. And by adding the word fundamental, I suddenly got it to do what I wanted it to do. So the prompts are extremely important. And if at first you don't succeed, go and mess with the prompt,
Okay, so let's go ahead and take a look at them. Again, we'll kind of shotgun through these. Here is the Twitter/Grok ranking. Again, Taiwan Semi at the top, Novo, Google. I have observed, as well as Ty, and I concur with Ty, that so far Grok seems to be more aligned with our way of thinking in general. But that's only true yesterday and today. It's not necessarily true for tomorrow. Fast-moving market. Or development when it comes to these tools. The ones at the bottom singled out by Grok are United Rentals, Schlumberger, and Gentex. Okay, you get a little description of them, and obviously when you go into these engines, you get much more if you want it. Here's the 2 sell recommendations. And by the way, I'll make the point several times over, none of these artificial intelligence engines are going to tell you don't need to sell anything. If you ask it what to sell, it's not going to tell you don't need to sell anything. It's going to give you something. Okay, so keep that in mind, because we know better. That's not always the answer. Sometimes the answer is you don't need to sell anything. In fact, most of the time, that's the answer.
That rhymes with a teacher's wish, Mark.
What's that?
A teacher's wish is, if I could only get rid of that student, But when you get rid of that student, there's always another one that you want to get rid of. So.
Okay. All right, so it picked out Schlumberger, singled out Schlumberger and Gentex. We've already talked about Gentex. In fact, we have a conditional sale on Gentex in the portfolio based on the discussions we've had over the last couple of months. All right, here's a look at ChatGPT. Anything surprise you here, Ken?
Not really. I liked the organization from ChatGPT. I like the fact that I think this is the one that gave me some thumbnails afterwards besides just the list. Gave me some reasoning behind what they were doing. But I didn't find that much variation in the lists themselves between this one and Grok.
And here were the ones that were a little more questionable and thoughts about considering trimming or selling.
And there's those same three at the bottom of the 13, 14, 15 again. Yeah.
Okay, so on to Perplexity. And in this case, I grabbed the table. There was also a bunch of text. So this is just one surgical excerpt from Perplexity, but again, some very similar type thinking, similar type forecasts.
Mark, I have in my notes to ask you a question. Are you paying for an upgrade in Perplexity?
I am, but I thought I had it turned off. That may or may not have been the case.
Okay, because when I ran the prompt in Perplexity, I could not get a table. Usually tables and any other graphics you have to pay for. I got the list with no problems, but I couldn't get the table when I ran the prompt.
In that case, I may have had it switched on. And when Ken says pay, I think I'm paying $10 or $20 a month for the commercial version of Perplexity. And that's the only one that I have any premium payments towards. So here's the rest of the table. And again, some very similar names ending up, except I did find it interesting that our recent purchase of United Therapeutics was on here as a sell consideration. So we can blow up and disregard Perplexity going forward. What do they know? Interesting. Here's Claude. This was the first time that I had actually looked at Claude. My knee-jerk reaction was it was a little more subjective and maybe a little less meatier. You can see the numbers are missing. The order is similar. They also disagree with Jim Cramer about Lululemon. And here's the rest of the list, right down to some of those familiar names ending up down at the bottom again, with one exception, Green Brick. I mean, Matt won't let us sell Green Brick, so we can forget about that.
You could, but I won't let you forget it.
All right, but this is what I wasn't expecting this, and I think this is kind of cool. This is, to me, this is more promising. It actually went so far as to suggest the condition of the overall portfolio with some suggestions. And Ken, I think you agree. This was kind of a nice touch.
Yeah, I really liked, especially the portfolio observations. I think that we already have pretty decent tools for handling what we want to sell, but I really liked getting another opinion about my portfolios and just suggestions on what I might take a look at and what might be something that the portfolio could use. A lot of times we're right on top of this, but a lot of times we're just bereft of any ideas on where to go with a portfolio. So I really, really appreciated Claude just giving me this to ponder over.
And we didn't find anything extremely attractive in the pure play. A lot of that is very early stage in the pure play AI beneficiaries, but there are some. And I mean, EXLS is pretty much a AI play. Cybersecurity, CrowdStrike and that set of companies is a decent thing. We'll look at a second here, but our clean energy and electrification, I think one of the selections we made for the portfolio is going to fit that. And emerging market, I always think of Mercado Libre and others in that area. So we'll see. Go ahead, Ken.
What I also like, before you get off that slide, what I also liked is that this is the one engine that did what you always tell everybody giving feedback should do. They didn't neglect giving a little bit of a back rub to the person that asked the prompt by saying, you have several strong quality companies that should help, but by making a very positive comment if they had something positive to comment on. And I think that's appreciated as you're reading through things that are sometimes a little bit negative about some of your babies,
Absolutely. And then Ken asked the question. He said, well, what are per play AI beneficiaries? Great question. You just simply continue on. I think I did happen to use Perplexity for this, but again, if you want to go shopping in this realm, there are some companies there to look at and be aware of going forward, for sure.
I'll just alert everybody, not a single one of these names on this particular list has any earnings at the present time.
Mm-hmm.
No, I should say has any positive earnings at the present time.
Oh, you're so fussy. All right, and then just again, this is just for a demonstration, so you can actually come right back at the tool and say, what are the best cybersecurity companies? I should have done it in Claude, but for some reason I slipped over to Perplexity. But again, it gives a fairly decent list of many of these companies we've talked about: Palo Alto, obviously Microsoft, Fortinet, CrowdStrike, and some of the others there.
It's kind of amazing to see old tech on that list as well, isn't it, Mark? Cisco and IBM on the list. Yeah.
There is a tragic error here, though, in that they don't include Oracle, because I need that for helping my groundhog portfolio.
All comes back to groundhog. I know. Okay.
Yeah. Well, yeah. All right. Here's Copilot, and I actually got these results without making Ken's modification, but yeah, I could see where that would happen. Again, fairly similar ranking from top to bottom. We'll go straight to the bottom, and they also had United Therapeutics down at the bottom. So here's a quick look and a couple. Oh, here's the ones companies to consider selling. Amazingly enough, EXLS, which we're going to dramatically disagree with, but and I'm not allowed per Kevin Gologly to sell my long-term position in Western Alliance, but can't even think about it.
Mark, Ty has his hand in the air, and I'm going to unmute him. Ty, you'll have to unmute from your end, and you're free to speak now. Ty, go on.
Oh, yeah, this is a great, Mark, this is really a great laydown of these different search engines. And I wanted to foot stomp what Ken discovered. When you start rank ordering, when you ask the AI engines to rank order something, they really need criteria. So fundamental works, they also tend, I've discovered, they tend to use target prices sometimes, which is something, I don't know how analysts come up with target prices. They have all different methods. But for our meeting, our club meeting tonight, I tried the prompt. I said, we're a model investment club. We follow the better investing principles. Here's our portfolio. I uploaded the CSV file from the Better Investing website for the portfolio. And it did a whole laydown on it. It talked about diversification, which, where we were over diversified. And then it gave it talked about how well we fit within, I don't know how it knows this, but how well we fit with the better investing principles, and then gave a series of recommended steps for the club. It was really very clever.
Very nice. Now, what engine were you looking at or using?
I think I was using Grok on that. I used Grok and ChatGPT. I used both of them, did the same kind of a prompt. But apparently it's the search engines understand, at least they have enough information when you say apply better investing principles, that then changes how it assesses to the portfolio. Yeah,
and you make a great point. I would go so far as to tell the engine, do not use target prices. I mean, yes. And because that we can prove that those are dangerous.
Yep. And you could probably also add in on the recommendations. You could also probably add in something only recommend companies with consistent earnings growth.
Oh yeah. Ken's got there in there already with the word reasonable and everything else. So here this is just a display that there's a range of opinions expressed.
Mark, I want to talk just another 45 seconds about the fact that you were able to coax a list out of Copilot, and I needed to change the prompt a little bit to coax that same list out. I've noticed frequently in the last 3 or 4 months now that if I do things maybe 8 or 9 days apart, very similar prompts or even identical prompts, I'm going to use the analogy. It's kind of like calling a company and getting their call service and getting directed to 2 different people that give you 2 different takes on the answer to your particular question.
Mm-hmm.
One person tells you can't do it, and one person tells you can, but you need to make this modification. And one person says, oh, I can make that happen in 30 seconds. You know, I think that we have to understand that it's almost as if every time you work through one of these engines, you're getting a slightly different personality because they're searching all of what they know randomly, and they're not telling you everything that they search through to get their answer.
And you may also be experiencing A/B testing, which is quite common, has been common on the internet for forever. Amazon is famous of it. You may actually have an experimental or slightly advanced engine in one or the other cases to explain why it's slightly different as well too. They test them live and look at the results. I call it true scientific testing because you can't ever replicate the world of internet users in a laboratory. So they put it out there live and compare similar results to see which one is actually better.
So it's like getting a trainee on the phone call versus getting somebody that's been there for 15 years, right, Matt?
Yep.
Yeah, and that's a point that we make, is that you should treat the other, whatever is on the other end of this exchange, as a research assistant. And that research assistant can have varying degrees of competence and experience and exposure and resources. So you have to look at it that way. Go ahead, Ken. You had a question?
Mark, Janet, yeah, no question. But Janet Blazer has her hand up, and Janet, if you'll unmute yourself, you can speak to us as well. Go ahead, Janet.
Yeah, who came up with this chart? Did you print this out, or?
I printed this out just to display the disparity of opinions.
I think that's a pretty cool chart.
And then Ken, because he is much like the Pope, a mathematician, he switched it to this.
Okay, well, thanks.
You're welcome, Janet.
I'll mute myself.
So Ken likes the numbers, and so do I. And again, you just get a feel for the range of opinions.
What I really like, Mark, is that this is sort of like a grade book in my estimation, and I never graded by percentage my whole teaching career. You know, 90 to 100, 80 to 90, that kind of stuff. I always looked for natural breaks, and that's where my grades divided. So I see a natural break right in here between the top 3 and the next 3, and then I see a natural break between those 3 and the next 2. And then another natural break between the next 2 and the next 2 after that. And then I think that the bottom is kind of well grouped together in a group of 5 down there. So, you know, I don't know what you want to, if you want to give them grades or percentages or what, but I would think that maybe the top 2 groups are groups that I don't want to play with very much in my portfolio, and maybe that bottom group of 5 presents me with a list of possible sales when I'm all said and done.
Makes sense. All right, so let's go ahead and finish a look at the portfolio. Here is a look at yet another source, but this is simply the rhinos, or the analysts following the companies, using their strong buy, hold, sell, and strong sell situation to give it a ranking of the ratings. And it's just there for kind of kicks to see what is out there. Because one thing is true, I put almost no emphasis or attention to any of those words uttered by the analysts, except to realize that the ones up at the top are going to have some natural tailwinds. You know, they're the ones that are hot, and unless Jim Cramer recommends one of them up at the top,
I will say, Mark, that if I'm listening correctly to my background noise on the television, those numbers for United Health in the last week have changed dramatically. So
Okay, we'll
yeah.
check into that. All right, so
You know how analysts are. When something bad goes on, they all go racing for the doors a lot of times.
It's a crash of rhinos.
Yeah, uh-huh.
All right, so here's a look at the Buttonwood portfolio using the worksheet. If you're not familiar, you can go to any one of your dashboards or portfolios on Manifest. If you click on that pull-down tab, not the Edit tab, but the pull-down tab to the right, you get access to this menu where the worksheets and alerts actually are hidden treasures. And if you hit the worksheet function for Buttonwood Bulls, you end up with the display on the right. And it is ranked from, what is that ranked by, Ken? That is ranked by par. So par descending over here on the right. And
well, actually, Mark, it's when it first comes up, if it's a very fresh worksheet, if you have reset it to match the original, then it'll come up ranked by whatever you had that original worksheet ranked by.
And that's usually going to be here.
Its value a lot of times, And if you're doing a new exercise, if you're not coming back a couple of days later to a worksheet you've used, if this is a brand new exercise, after you pull this up, you always want to hit that reset button up there so that you make sure that this worksheet matches the original portfolio exactly to start with.
All right, so this is kind of the way that I look at this situation. There is the portfolio with just the tickers and probably the four main characteristics for thinking about making changes to the portfolio. And of course, our primary driver is the return forecast or the projected annual return. So they're sorted from highest to lowest. Any guesses in the audience on what that red line represents between Texas Roadhouse and Novo Nordisk? And as you guys think about that, we just say that the candidates for potential sell considerations are at the bottom. Potential purchase considerations are at the top, including the top four, which happen to be in the sweet spot as we define it. Any guesses yet on the red line, Ken?
So far, nobody's been guessing. Let me check it again right now, but no guesses. Okay. So they're waiting with bated breath, Mark, for you to tell them what the answer is, okay?
Well, the median projected annual return is the average return forecast would be right around 10. So literally any non-core holding below that red line would be on the hot seat, if you want to think of it that way. So in this case, Visa gets a pass. It's got the lowest return forecast, but it also has almost unmatchable quality. Double-digit growth also gives it a bit of a pass. And again, for a company like Visa, we really wouldn't think about, even if the portfolio needed it, selling it as long as that par is not in the neighborhood of zero, as in 0%. But the second one up does trigger. Ken has had this in his crosshairs for a few weeks now, with a 5% growth rate, and it's an excellent quality company, but it's one of the lower ones in this particular portfolio, and a projected return around 7%. United Rentals.
I was a big champion of United Rentals about a month or so ago, Mark. When I anticipated United Rentals was going to add a significant company to its stable of partners that it already had. It was going to make a significant merger with another company that was outside the U.S. and kind of out of the blue, everything seemed to be going quite well with that merger, and then kind of out of the blue, they just announced one day that they were dropping the whole issue. They were not going to be interested in continuing the merger. I don't know what happened or how it happened, but it did happen, and that suddenly changed what I thought the company was going to be looking like 5 years into the future. It was going to be a much smaller company than I anticipated. United Rentals is not the only player in this space, but it is one of the major players in this space. It has a lot of competition, and I think that competition is evident in that loss of the merger candidate. So I don't think that the sales growth forecast is anywhere near what we anticipated it was going to be when we put it in the portfolio. The par is still just, a little bit under where we thought the par was going to be, but it's far enough under where we thought it was going to be that, coupled with that sales growth, I think we can do better in the portfolio.
Yeah, and we're not saying this is a bad company.
Not at all.
Not at all. It's a very good to excellent company. And the one concern I would have is that it is a bit of a vote against it's kind of a loss of confidence situation. And if this tempering, it's a kind of a flattening of the sales growth, doesn't get a bit of a boost, then they could be facing some challenging times. The cash flow is pretty good, but it's also tempering. And there was a considerable hope that the operating margins would ramp up and that they could actually experience a pickup in sales growth. And, you can see for yourself the value line forecast from -1 to +7. Morningstar obviously believes they're overvalued at this point. The analyst consensus, those rhinos out there, disagree a tiny bit, but it is, even after the drop, after the failed merger, still in that a bit overbought area. So we will.
Well, and that value line paragraph, Mark, was the final kicker for me. We owned United Rentals in a club that I'm in, and that paragraph right there basically sealed the deal to move it out of our portfolio, because Value Line had been fairly positive to very positive about this company up until this last Value Line.
Yep, there were much higher expectations for the post-merger operating company. So we go ahead and we flick the arrow and put them in purgatory, and basically take their $320 and add it to the cash position in the portfolio, and now we have the latitude to go shopping, either replacing it or adding to positions within the portfolio or going outside. I took a couple real quick looks. I'm not going to spend a lot of time on this, but I was looking for a company on sale, excellent quality, with a little bit higher growth rate, because I want to try to keep Ken happy. And I'm just not finding a whole lot to get excited here about, other than the one that we just added. And we have a relatively full position. We could add a little bit more to United Therapeutics, but some of those other ones, I'm scared of this one still. So I don't think I can get fully behind it unless we're talking about the people who actually wire them up. More on that to follow.
Well, and I can't believe the growth rate on the one right beneath it, Mark, with the competition that's going on right now for computer hardware in these data centers.
Yeah, this is an interesting company, possibly as a study. I think maybe we get Matt to lead that in the future. We've talked about them briefly, but could be an interesting thing to look at also. I also went out and looked for companies that have relatively low relative strength index, hoping to find something that really captured my attention. I imagine United Health is headed for an RSI under 20 tomorrow based on today's price action. So yeah, investors out there that believe United Health has a future, it was down what, $40 or $50 again today, Ken, is that correct?
The last time I looked, it was more than $50 down, Mark. That was maybe an hour and a half ago, so I don't know what it's doing now. We frequently see this with stocks that are in the throes of a major readjustment in price, both going up and going down. The par can't possibly keep track with something moving that quickly, and for a moment in time, pars soar. A lot of times for damaged merchandise. So you have to be very, very careful when a stock that's never been something you want to take a look at suddenly has a par in the high teens or low 20s. it happens when there's a major disruption for the company, and that's going on today for United Health Group with the abrupt resignation of their CEO, and with continued lack of any kind of guidance. They withdrew all their guidance going forward for the next year.
Yeah, pretty rough. I love Becton Dickinson, Church and Dwight, and Wendy's, but these numbers are just a little too low. So 0 for 2. And then Ken brings this one. This one is compelling, and it actually matches up with some of what Claude had to say. There's some pretty powerful trends here that make a lot of sense, and these guys seem to be very well positioned.
Yeah, this company's not new to me. We've owned it in one of my clubs now for about 3 or 4 months, and it's been on a real tear. But the whole concept of electrification and companies getting attached to this comet called the data center, and suddenly having all kinds of business in addition to their normal business that they never had before. That's what's been happening to IES. You can see from the thumbnail on the right there that it's a fairly easy to understand company. What it does, it operates the electrical and technology systems. It not only designs and installs them, but then it will service those systems as well. And the major things are in communications, residential infrastructure solutions, and then commercial and industrial solutions. And that covers data centers among everything else. They've gotten a lot of business since the pandemic in data centers. You can see that reflected in their earnings line there from around 2022 moving forward to 2024, that steeper blue line right there. And I just think it's a company that's extremely interesting and that bears a lot of taking a look at. It has a really good quality rating, somewhere in the low 80s, and the par value and the proof value are holding hands with each other. They're not nestled together in the same bed, but they are holding hands with each other. And I just think it's a great company we might consider for the portfolio.
Improving profitability, and as someone who has within the last month hired both a plumber and an electrician, those are high margin businesses. All right, so here's the portfolio. What I think we will go ahead and do, we're not going to demonstrate it here because we're running a little bit long on time, but we're going to go ahead and basically follow the advice of going with one of the companies up near the top, which is not overweighted in terms of portfolio position, but Google. Add half a share to Google and up that percent of total a little bit. And the same thing holds for Taiwan Semi. Go ahead and tack on a little bit of Taiwan Semi. And then we do disagree. We think EXLS as a consulting and information technology company, they're doing some great work. And they were just added, I think Patricia said they were just added to the Value Line Standard Edition. So I think EXLS is an AI play, and they've been doing AI for a long time. Makes a lot of sense. And then Ken would like to add, and I endorse the suggestion, IESC to the portfolio. The result of that will be a boost in the projected annual return and the overall growth rate of the portfolio.
And it doesn't leave us with an inordinate amount of cash, Mark. It leaves us with about a 2% holding in cash, and that's a fine holding for any portfolio to have a little tiny bit of cash in reserve. So,
yeah, you never know. I mean, they might talk a little bit too much on TV, and the prices will all drop again. Good stuff.
Well, is it time for me to mention my article about Mr. Kramer? What do you think? There's an article circulating on the internet right now that says, do not buy these 3 stocks that Jim Cramer recommended, and our Lulu is one of those 3 stocks. So we'll see if the masses will move Lulu to a new low after that article appears.
Should we buy a put or something, or do something to hedge the portfolio?
Well,
Kramer hedging.
if it wasn't going to it confuse half of our audience, I'd suggest giving some insurance, but I think that we're not quite there yet in this portfolio.
Okay. All right. So yeah, and of course Jim is famous. I don't know if this was I have not verified this from a credible source, but the rumor has it that Jim Cramer came out 2 years before Pope Leo was uh, named with the prediction there will never be an American Pope. So Cramer's streaky. He's on quite the streak. We'll just say that. Love Jim Cramer. Don't take any of this in a bad way, but wow, he's made some interesting calls over the years. Here's a reminder that we
Yeah,
do.
just one last comment on that slide before you go into the wrap up, Mark. Okay, we still need, and I think that all of you would be well served to keep a real close eye on your growth column, your sales growth column, because ultimately, if your par is going to be somewhere around 14, 15, 16%, then your growth column is going to have to be somewhere around 13, 14, 15%. And we're still away from that. We're doing better than we did last month and the month before, but we're still only not even to 11% yet. So we still have some lower growth companies that we need to take a look at. We still have Gentex, we still have Lulu, and we need to take a look at those as possibilities if we can find suitable candidates to replace them with, but only if we can find suitable candidates to replace them with.
Absolutely. All right. And we thank Claude for drawing our attention to the areas where the portfolio needed attention. So again, on YouTube, we do archive roundtables and bull sessions and some of the special educational sessions. So if you go to YouTube, just enter Manifest Investing, you will find, or use that link on the upper right, and you'll find the collection of videos. Just a quick moment to point out that on June 7th and June 14th, although I think Ken and I are doing our sessions on the 7th, we do have the virtual national convention for 2025, and you can find this page on the Better Investing homepage. And Ken and I will be involved in the Let's Talk Stocks panel and our traditional two guys presentations. So check that out, and we would look forward to seeing you there. And where we usually have a picture, this is the Nick DiVirgilio semiconductor moment. And I got cold feet, and I've not fully benefited from this, much like my groundhog portfolio. But the whole premise behind this was the day after Liberation Day, my thinking was they're not going to mess with the semiconductors, the supply chain with semiconductors. I still believe that. I still believe that in general about many things with the mysteries of the tariffs. And that would have been a pretty good call. I hope some of you out there took me up on this one. All right, so with that, I think we are in good shape time-wise. Ken, any comments or questions?
No, we've stayed current right along the way here, Mark. So we'd like to thank everybody in the audience. We had a really nice audience this afternoon, and wish them well and hope to see everybody next Tuesday again.
All right, well, thanks everybody, and thanks for spending the time with us here today. Take care.
Bye-bye all.